This is Alan Bush with ADMIS. In the stock index futures, we did see prices higher. This due to news that the Swiss National Bank, who already had negative interest rates, made interest rates even more negative. Also, we had India's central bank cutting interest rates as well. So more accommodation coming from central banks around the world seen as supportive to stock index futures. But it is not just these two central banks that ease credit. It is very likely that the European Central Bank at their upcoming meeting on January 22nd will announce a massive sovereign debt quantitative easing program. So more accommodation is coming from many of the world's central banks, and that should remain supportive to stock index futures over the long term. Over in the foreign currencies, the big news there was the Swiss National Bank abandoning their 3-year attempt to limit gains of the Swiss franc against the euro currency. The announcement caused a very sudden shift in exchange rates, with the Swiss franc advancing very sharply against the euro currency. We continue to believe that the euro currency will come under additional downside pressure in advance of their policy meeting coming up on the 22nd, as we just mentioned. So look for lower in the euro currency. Also, we are seeing some gains in the Australian dollar. This due to increases in commodity prices, with crude oil advancing in the overnight trade. Some of the metals also doing better. This also supported the Canadian dollar. So the commodity currencies doing better. Some additional strength in the Australian dollar after employment numbers in December showing a surprise increase. And the yen, still somewhat of a flight to quality bid in light of the political situation in Greece, and the yen seen as a flight to quality vehicle, as is the US dollar. So I would look for the yen to hold up relatively well in advance of the Greek elections on January 25th. However, once those elections are out of the way, I think we can see the downtrend resuming for the yen, as the Bank of Japan is likely to add more stimulus to their banking system. And interest rate markets, yesterday the 30-year bonds made a substantial high. Actually, it was a 20-month high in that market. Some profit taking coming in more recently. Longer term, still feeling that the main trend is higher, especially at the long end. That would be the 10 and especially the 30-year bonds. So nothing changing there. The main trend for treasuries, especially long end, continues to be higher. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.